So here's the big thing. People who are looking to buy a house, they need to take a lot of other things into consideration, right? I think that's like the biggest, like I don't like to just like poo-poo on other companies and stuff, but that is like the biggest like kind of bait and switch from like Zillow and stuff like that is they'll just advertise like $900 mortgage payment, and it's like no. So here's the big thing. People who are looking to buy a house, they need to take a lot of other things into consideration, right? The principal is what's going to be advertised on a lot of these sites. You need to take into account that you're not really going to be paying very much principal for about the first 15 years. So you're banking on your appreciation. That's why real estate is a really solid, steady investment. You're going to appreciate at a solid rate of return, and then over time you're going to pay more and more and more principal. But the major things that are going to go into your mortgage payment are going to be your interest. That's why your interest rate is super important. If you put less than 20% down, you're going to pay PMI, private mortgage insurance. It's basically a little bit of an extra fee you pay on top. Doesn't happen on every loan, so check with your lender, right? Because lending standards and different things, they change all the time. There's all sorts of different, down payment assistance programs and all sorts of other stuff that like, they don't have PMI, but that's usually going to be a thing on there as well. Homeowners insurance, people don't even really talk about when they talk about mortgage payments, right? So like there's a whole bunch of different stuff. And you work with a ton of buyers, so I don't know what kind of conversations you've had, but I'm sure you've had a lot where people were just kind of blown away what their mortgage payment actually was at the closing table when they see it. So I think that's something that people kind of overlook up front a little bit.
It's changed over the years too. I used to tell people a long time ago, especially when a lot more people still watched cable, I was like, have you ever watched a commercial where like the local Jaguar dealership tells you can drive a Jaguar for like $438 a month? Guess what? You can't.
You can,
right?
exactly.
Like that is the most extreme set of circumstances, right? Like that nobody really qualifies for and all this other stuff.
Dude.
So that was always the example I used to help people keep in perspective.
That's such a good way to put it.
It is. It's just, and I think one of the things that I ran into early on in real estate that was the most helpful for my buyers was just understanding what goes into it. And it's why a lot of people, when they use a larger national based like lender, they'll run into these problems too, because that lender isn't calculating the property taxes correctly, which is a huge part of it. And they're not calculating your homeowner's insurance.
Yes.
Those are the two numbers that I will tell you. When a buyer gets sideways and a number changes on them dramatically from one lender to the other, it's not usually like some points in interest rate. It's that the lender completely miscalculated their taxes. Maybe for the state of Texas specifically, right? In specific counties, they didn't file your homestead properly, right? Or they're looking at the unexempt taxes online, which maybe it was owned by somebody who had an over 65 exemption and a homestead on it, and you're buying it as a second home.
100%.
So you don't even get to put your home. You get neither of those
you get
tax
none
benefits.
of those benefits.
That's hundreds of dollars a month, potentially, right? So, and those are the types of things that I think, especially if you're a first-time home buyer or you're buying on a limited budget, those are the numbers that, look, I've been that way. If you're coming in a couple $100 of what you can afford at the end of the day, and then that number changes on you a week before closing, the other thing too is it doesn't just mean you just get out of the deal either, right?
Yeah,
like you might be stuck. We're not taking into account the fact that your home's going to appreciate over time, so your insurance and taxes are going to go up, right? We hope that you get a job increase, pay increase of your job every year too.
Sure.
But those numbers are going up every year.
I think that's usually you touched. So if you're looking at like a rocket mortgage or something like that, like there's like, again, I'm not going to poo-poo on other companies. There's I wouldn't say there's anything wrong. There's a bunch of them out there, but it's just something to be highly aware of. Like when they put you on their little conveyor belt, you are not really an individual to them, and they're going to take sort of the path of least resistance in their processes. So they're going to get tax rates wrong. They're not going to factor in insurance. You buy a house in California as opposed to Dallas, Fort Worth, Texas, right? Totally different ball game when it comes to taxes and all of that type of stuff, right? Other people, I mean, and obviously HOAs and stuff are stuff that hopefully people are smart enough to take into consideration because they're pretty well advertised. But I think another big thing that is important to note when it comes to things like tax rates and stuff like that, especially if you're a first-time homebuyer, it's important to really, really start to prioritize what's really important to you as well, right? I'm doing a deal right now where it falls in one city, but it's not in that city's school district. It's in the city next door school district. There's a lot of that around here. So in the school district that it doesn't fall into is traditionally been very, very, very highly rated. And it still is, right? but they don't have kids right now. They don't plan on having kids for a while. And while I do encourage people to get into good school districts for your resale value, the story I told them about this particular school district, and I'll see if you can pick it out, is that you pay a lot more in school district taxes, which go into your tax rate. This particular school district has been expanding like crazy for about a decade now. They add about 2,000 students a year, and I think they're on their 95th high school or something like that. Right? And so when that happens, it's really, really difficult to maintain like your teacher to student ratios, all that type of stuff. Well, the people who are now paying property taxes who have been there for 10 years, they're now basically paying for everybody else's kids to go to school, right? And they're leveling out as far as their rankings and stuff like that. It's just really, really difficult. That's why you have places like Lovejoy ISD and stuff that are really highly rated. They're also very small. Yeah. It's really, really way easier to have a really great school district when you have fewer students. You can give them a lot more personalized attention. You have, your more of your taxes go towards the budget, stuff like that. So it's something to think about the future, right? If school districts and things like that aren't important to you right now, understand that and listen to a good agent, listen to your realtor, listen to somebody who knows what they're talking about when they talk about, look, you may be paying a tax rate that made sense 10 years ago, but it may not make sense 10 years from now in the direction that we're heading. It may be better to pay lower taxes in the school district next door. And that's going to make your mortgage payment lower too. Absolutely.
I think just one of the main things that I've always been able to one of the bigger conversations that I typically end up having to have with buyers initially in their process is just helping them understand that there's about 5 different numbers that make up what we call our monthly payment for our house, right? It's your principal, it's your interest, it's your taxes, and your insurance. There's your 4 that are going to be there for pretty much everything, unless you're paying cash for the house and you decide not to carry insurance on it. Yeah. And then you just pay your taxes out of pocket every year, I guess. But the bank is probably, for most average people, the bank is going to take those 4 pieces of monies and then add other fees to it depending on where you land in their risk spectrum.
Sure,
right? Exactly. With your PMI and those other things that are going to drive it up. It's also important to note that that's, if you have a decent credit score and 3.5% down, you can purchase a house, right? I think I still am always surprised, and we're in this industry, and everybody watching this, they have a job where they know the nuance behind the scenes. Right. They're always surprised other people don't know
what they do. Yeah.
And I feel like I need to reiterate this every time I hear it. Like 20%, 10%, that's amazing if you have that. But as a first-time home buyer, don't let that to be a barrier. A lot of these people that you hear talking about, I put 20% down on my home. Some of that was the equity from their first home that they built up. Right? Like there's a lot of stuff that goes into it. So don't be scared away by that part of it. Sometimes it might make more sense for you to purchase now, live in it for a few years, and then, game plan for the rest of it afterwards.
100%. Well, if you got questions, we got answers. Make sure you do hit us up, Herd Group DFW. You can find us at dallas.herdgroup.com. We're going to have stuff that pops up here. I don't even know why I'm announcing this. Just click on the stuff below. Do it in the description. You know how YouTube works.
You wouldn't be here if you didn't.
If you didn't, exactly. Derek.
Thank you so much for watching another video with us. If you found the information helpful, make sure to subscribe and hit that notification bell. You can also follow us on Facebook and Instagram at Undoubtedly Dallas if you want some other information. There's going to be a link in the description. Make sure that you comment some subjects that might be interesting to you so we can bring you more content that's relevant. And we truly appreciate you guys taking your time to check it out with us today. Have a good one.